Hey Titans, welcome to another live session here within Titanology. And today we have our Titan Master in the person of Marcus Hammond. Hey Marcus.
Hey, how you doing?
Good. In today's session, we're going to talk about how to form a business entity in the US. And Marcus, you are the founder of LLC for me. I think the name says it all. So you are going to show us all the steps that are involved in creating an entity in the US. And I, for one, am all about that because I am from Europe, I'm from Belgium, but I have created my own LLC for Titanology in the US. So I'm really excited to have you on board here and to hear all about it from you.
All right. Thank you so much for having me. I truly appreciate this opportunity, and I hope everyone's doing all right wherever you may be watching this broadcast from. I'm in the United States. I'm in Los Angeles, so it's 9:30 in the morning here. I'm not sure where it is for everyone else, but hope you're having a good day or good evening wherever you may be watching from. So I'm going to go ahead and share my screen, and we're going to bring up my PowerPoint slide. I started my company LLC for me back in 2009. My background is that I have experience as a corporate paralegal working under corporate attorneys that form business entities in the United States. So I learned from the masters on how to do it. And a lot of the steps, most of the steps that you can actually do them yourself if you're willing to do kind of the research and the legwork. There's only one actual portion that we strongly recommend that you use a legal professional for, simply because the impact on your business is going to be so much greater based on this one particular step. But for the most part, a lot of it can be done on your own. My clients have a tendency to hire me because they're like, I don't want to worry about all of the legal regulatory portions of it. I just want to create the magic that I create, and that's it. And so those are the types of most of my clients are kind of that way. They're kind of a little afraid because a lot of people don't have access to this knowledge and information outside of a traditional attorney's office. So that and just kind of wanting to give people that economic opportunity is really kind of what formed my reasons for forming my company. My educational background is I have a bachelor's degree in criminal justice and legal studies, and then I have an actual paralegal certificate as well. My work experience includes being a paralegal for corporate attorneys for the U.S. Small Business Administration, as well as the D.C. Attorney General's office. So with that said, let's go ahead and get right on into it. So I don't want to be before you too long. So I'm going to go ahead and I'm going to share my screen, and I'm going to pull up our presentation that we have. It's a PowerPoint slides. So let me pull that up real quick. If it will. Okay, here we go. Documents. Let me go ahead and share my screen.
Hey Jay, welcome. If anybody who is watching right now has some questions during the presentation, please put them in comments and we will get to them once Marcus has some time to get into it, or after the presentation for sure. So let's get this up here. There we go.
Yep, there we go. That's me and my lovely, wonderful picture. But right off the top, here's your checklist. A lot of times people won't give you like the specific steps on what to do. They'll say, oh, I kind of did this, and you got to dedicate to having a business. And they'll give you a lot of lip service or a lot of platitudes, but it's like, where's the step-by-step? How do I do it? So right off the top in my presentation, I'm giving you these very steps right here. So if you need to record, if you're taking a picture, go ahead. I'm gonna give you a moment to take a picture of this checklist right here, because this is step by step, literally what you need to do to form a new business entity in the United States. Step 1, conduct your marketing and zoning research. 2, preparing a business plan. The market research is pretty much looking into your individual market to see what's going on, what are the trends, who your competition is, things of that nature. Zoning has more so to do with where your business physically resides, because different areas of different cities in the United States are zoned for different things. So creating a business plan, you're going to select your business name, pick your business entity structure, and what state you want to do it in. You're going to file your organizational documents with the state. You're going to prepare your business governance documents. Then you're going to get your federal tax ID and your state tax ID if you're selling products, and select your accounting method. Then you're going to open your business bank account. You're going to get your business licenses if you need them. In the United States, some are come at the city, some are at the county level, and some are at the state level. And then your very last step is going to be purchase business liability insurance. So step 1, conduct marketing and zoning research. All right. So here's a good definition of market research. And it's really pretty much you're just conducting research to find out, who are my competitors? What are they doing? How can I differentiate myself in this particular industry or market that I'm in? So that's pretty much what you're doing when it comes to your marketing research. So you've got that there. It allows you to kind of be responsive to your customer needs, increase your profits, and all of those types of things, because that's kind of what you want to do. You want to make sure that what your business is doing is a viable option. And what it means is, is your market very crowded? Is there a whole bunch of people doing what you're doing? And if so, you've got to find a way to stand out in the crowd, so to speak. On another note, the reason why they are specific, I'm going to go back a couple of slides. The reason why these steps are in this specific order is because a lot of them build upon one another, or for some of them, you can't actually do the next step until you do the previous step. For example, in steps 4 and 5, you're filing your organizational documents with the state to actually form the business entity at the state level. But then in step 6, you're getting your tax ID or your employer ID number from the federal government. But if you try to get a tax ID first, which is what some people do, you may find that in your particular state, your name that you wanted has already been taken by someone else. So now you have to then go through the process of changing the business name and things like that. Another example is in terms of your steps 5 and 7. So in 5, you're preparing your business governance documents, which are things like your operating agreement for an LLC, or if it's for a traditional corporation, your bylaws. When you go to step 7 to open a business bank account, many businesses will not allow you to open a business bank account if they're not able to see the construction of how your business operates, who your beneficial owner is, who owns the company, things of that nature. So that's kind of the specific reasons for these steps being in this particular order. So, all right, going on back to step 1. This is kind of our definition of market research there. It's just really different types of ways to stand out. If you've already been operating, then general market research may not be necessary. But it's always a wise idea to learn the specifics of the market in the country you may be trying to break into. So if you are not in the United States, but you want to start a business in the United States, you have to kind of learn how marketing works in the United States there. So that way you can then be more effective in adjusting how you operate your business in the United States versus how you may operate it in your home country. The reason why zoning is important is because, we'll get to zoning next. These are different types of marketing research. These are different techniques that people in different companies use to kind of test the waters, to kind of see, is my idea viable? Is it, is my market saturated? Is my product something that people actually want and need? Do the services that I'm offering, do they solve a problem that someone needs assistance with? And so these are different types of marketing research that people will do to kind of test their ideas, test their theories, see how people respond to it, to know whether, okay, yes, the way I have it now, we can move forward with it. Or, okay, we can move forward, but we probably kind of want to tweak and change a couple of things. Or, okay, this was not the right execution. Let's scrap that and try a different form of execution. So there's a couple of them. A panel is one that's very common. Test marketing is another one that's very common in the United States. Is they'll do like what they call a soft launch, which is where they do a small scale product launch to see how a small targeted group, accept and like your product, to know, okay, we think this will go well for the general population. All right, moving on to zoning research. Actually, let me check the questions box to see if we have any questions here real quick about the questions. Oh, okay, no questions so far. All righty, we'll head back to the presentation. Zoning is pretty much what, cities use to govern the uses of the buildings in a particular neighborhood or environment or city area. And this is important because certain buildings in certain neighborhoods can only be used for certain things based on their zoning. And this would prevent you, based on that, if you're in a residential, what's zoned as a residential neighborhood, then that neighborhood is zoned strictly for houses, apartments, condos, townhomes, any structure where people are going to be living. So if your business, if that neighborhood is zoned for that, then it might be a little difficult for you to try to build a manufacturing factory next door to your house, because your neighborhood is not zoned for that. So that's why it's important to kind of do the research onto the zoning for your particular business type. And this also depends on what your business actually is going to be. For example, if I'm building widgets, I'm going to need a factory. I'm going to need somewhere to actually build the product. So I'm going to need a factory. Versus if I am simply just a freelance graphic designer, I'm not going to need a whole new factory pretty much to get my business started. So that's another reason why kind of zoning comes into play, and you have to adjust your research and things based on your business model. So to help combat having to do a lot of research over zoning, because zoning is, I'm a paralegal that has legal experience, and zoning sometimes for some people can be a little bit of a snooze fest. It's boring. They don't want to do it. It's difficult. And it's understandable, because me being someone who knows how to do it, it isn't the most exciting thing in the world. But the rise of certain things such as subletting or virtual offices or ghost kitchens have been what a lot of business owners have used to have to remove this step altogether. Because pretty much what things like that are is you're going to find an existing business who already has the type of facility that you need for your business and pretty much sublet that from them. So for example, with the United States, we have what we call ghost kitchens. And what ghost kitchens are pretty much a business who has built a kitchen like you would find in a restaurant. And what it does is it sublets a whole bunch of miniature kitchens inside of this one large building to entrepreneurs or chefs who want to get their cooking business started, but don't, want to do all of this zoning research, don't have all the funds to buy their own building and things of that nature. So what they can do is go to this ghost kitchen, rent a kitchen from them for however many dollars a month, and everything that they need is already right there inside the kitchen. All they have to do is bring their food, their spices, their cooking utensils, but the kitchen setup, The zoning research, knowing that this building is zoned for what they want to do, that part's already been taken care of. So it's a lot of times it can be a very economical and less expensive way to kind of get started right now. This is also done with businesses who are more office oriented. And what we call those are called virtual offices, where pretty much you're paying an established business who has an office building for the use of their location address, their mailing address. And what they do is things like they'll collect your mail for you and you can come and pick it up, or you can have them send it to you wherever, forward your mail to you for a monthly fee. And so those types of solutions clear out completely your need for doing a lot of this zoning research and making sure that, what you want to do, the neighborhood your business is in, is zoned properly. So that's the importance of zoning research. So, all right, moving on to our next slide. Step 2 is preparing a business plan. And here's a definition of what a business plan is. It's just a formal statement of what you're going to do. What's the background information on your business? How is it going to operate? What's your financing like? What are your financial projections? Most times, this is one of the most important items because it sets the tone for the majority of the major decisions you make regarding your business. And below, I've put a couple of links to a couple of different places where you can go get a free business plan template to kind of get yourself started. And the reason why business plans are important is because it's going to be very important. Again, this is going to be tailored based on your particular industry or business model. It's important because let's say you're eventually going to seek to take on, a business partner, or you're going to seek to take on investing, from getting funding from outside sources such as like an angel investor or a silent partner or things. They're going to want to see your business plan to see, hey, if I'm going to invest in this business, what is my return on this investment? Who's running the business? What's their experience in running the business? Do I want to invest in this? Am I satisfied with how they plan to approach their business to the level to where I would be comfortable investing in their business? So those are the types of things that are important, why a business plan is important. Also, here in the United States, we have a government entity or government agency called the SEC, and that's short for the Securities and Exchange Commission. And if you decide to take your company public, which means your company is no longer privately owned by you, the SEC requires you to register with them and to produce certain documents that you have to disclose to your potential investors for them to know whether or not they want to invest in your company. So that's another reason, and they're going to want to see your business plan as well. And like I said before, it's also your business plan its level of importance is based on your business type. So, for example, if you're going to need, again, going back to the building widgets, if I'm going to build widgets, I'm going to need a factory. A lot of times I'm going to need outside funding for something like that. They're going to want to see my business plan if I'm going to a bank to say, hey, can you guys loan me $500,000 to build my business? But if I'm simply a graphic designer who, is ready to get started right now, I may not need a full-fledged business plan with all of the bells and whistles and things of that nature. So they have what's called like a lean business plan, which is kind of more of a high-level focus versus getting down into very specific the way that a traditional business plan is. So moving on, here are some of the typical questions that a business plan is going to answer. And these are the things that people are going to want to know about your business to know, whether to invest. What's your product? What's your service? Who's your target market? How will you make your money? How are you going to differentiate yourself from your competitors? What are the risks and the threats to the business? What are your financial resources, or what are the company's financial resources? What has the company done in the past financially? What are you projecting the company will do in the future? Those are all types of things that people are going to want to know. So, and these are the different sections of your business plan. And I have more information about how to construct these in another seminar I do, which is called, Business Plan Basics. And that seminar goes into a detailed description of how to construct and how to implement this information and put it into your business plan. But these are all the different sections that go in a traditional business plan. You want a table of contents to make it easy for them to find, specific information. So if I happen to be an investor and I'm a numbers guy, and all I want to see initially off top is your numbers, I don't want to have to flip through 85 pages of everything else to get to your financial plan. Let's say maybe I'm more of a personnel type guy, and I want to see, okay, who actually works in the business? Who's running the show? What are their qualifications? Are they even qualified to be running the show? I may want to skip to your executive summary, and your business description versus having to read through everything else. So this is why this kind of table of contents is important. All right, let me stop for a moment and see if there are any questions here in the chat box. All right, yes. No questions in the chat box.
Marcus, there's one question, but I'm not sure if that should already be covered now. And okay. It's about the privacy policy, terms and conditions. If that is something that needs to be independent, or is it something that you can get with platforms that have a built-in privacy policy like Patreon and MailChimp and so on?
Yes, some platforms you can get it built in. Other platforms, you will kind of have to come up with your own privacy policy. And a lot of times an easy way to do this is, especially I found a lot on social media, particularly Facebook, there will be attorneys that will market themselves to prepare a terms and conditions or privacy policy for you based on your particular business. Sometimes if you're in a pinch and you just kind of need to get it done quickly, find a company that has terms and conditions find a company in your industry that has it. If their terms and conditions are on their website, you can literally kind of copy and paste and tweak it to fit your business. So you're kind of not plagiarizing, but it keeps a lot of the substance of what you need for your terms and condition and your privacy policy.
Awesome. Thank you.
All right. Not a problem. All right. Let's head on back to the presentation. Let me see. Did I go back to did I miss the screen again? Okay, here we go. All right. Step 3, you're going to select your business structure, your business name, and your location. All right. What's in a name? A rose by any other name smells just as sweet. That's a little bit of poetry there for you, a little bit of Shakespeare in the morning time for you. But when you pick your name, you got to come up with some backup names in case yours is not available. So, and once you pick it, it's wise to protect your business name. And the reason why is because you have sometimes what will happen is if you don't protect it comprehensively, someone else could kind of muscle in on your territory, so to speak. So for example, I don't know if they've heard in the news about Facebook changing their name to Meta or dealing with the metaverse. Well, there was a young woman who had the name on Instagram and her business name was Meta. And she's had it probably for about the last 8 or 9 years. And when the announcement for Facebook came, since Facebook owns Instagram, her account kind of disappeared. And she had to go through all of these hoops and jump through these things to get it back. And then they finally restored it to her. But that kind of shows that Facebook maybe not thinking ahead to a particular name change, or they didn't foresee them possibly changing their name, didn't secure that name on Instagram, on that particular social media platform. And so although they've now changed their company name, they can't actually use that name on the Instagram social media platform because it's already taken. So those are reasons why you want to to search and protect your name, make sure your name is available, and then you want to protect it. And these are the ways that you do it: by filing a business entity, which is an LLC or corporation. It protects it in your particular state. By filing a trademark, it protects it across the United States. And then the domain name and social media names protect you on the internet, simply because if you have an worst case scenario, let's hope this doesn't happen to you, but if you have someone, a business rival, who's very cutthroat, who's not very ethical, if you go form your business entity and you start doing very well, let's say you're raking in the sales, but you didn't get a trademark. Well, then what happens is they could decide, I'm going to try to capitalize on this name or make some money off of your company by getting a trademark for your business name. And then if you want the trademark, you would have to pay them for it. So this is why it's kind of wise to do your due diligence ahead of time, because those obviously are worst case scenarios. But because getting your business entity in a state only protects you in that particular state, someone else could have the same business name in a different state, and nothing would preclude them from operating under that name in another state if you don't have the trademark itself. So that's again, those are kind of worst case scenario situations, but it can come to pass. So these are the reasons why you want to kind of protect your business entity. And when it goes to picking your business structure, there are pros and cons to each one. You have to kind of find the one that's right for you. And just to give you an example, in the United States, a corporation is the oldest and most well-known business structure because it's been around the longest. So it's when it comes to investors, if they know that you're as INC or incorporated after it or co after it, they know you're structured as a corporation. So they said, okay, these people have done certain things to form their business entity, and we know what they have to go through to do that. We also know what they have to do to maintain it, which to maintain a corporation requires more work. There's more legal and regulatory requirements to maintain a corporation. So you've got the good with the bad when it comes to that. Conversely, an LLC is one of the most popular business structures because it combines the good parts or the pluses of a corporation and a partnership. So it's easier, but also it's a newer business structure. I believe in the United States, the first LLC statute that was formed for a state, I believe was in Wyoming, and I want to say it was in 1994 or 1996, compared to corporations who have been around pretty much since the country was founded. So there's different pros and cons for each business type. But according to the National Association of Small Businesses 2017 economic report, the majority of small businesses surveyed were LLCs, were limited liability companies. 35% of them were LLCs. S corporations were 33%. Traditional corporations were 19%. So an LLC is actually, ever since its inception, has been a very, very popular business type because it's not super difficult to form. It doesn't have a lot of the same regulatory requirements as a corporation, which allows for the flexibility of who and how it runs. So, all right. So those are the different business structure. Each one has a different, pros and cons. And when you're picking your location, certain things are, let me go back. When you're picking your business structure, certain locations are more advantageous for certain business types. So for example, let's say you're having a physical storefront. Picking a storefront that's near public transportation can bring in the foot traffic from people who may not own cars. It's also advantageous for if you are a nonprofit organization who services clients that may happen to be, transient clients or unhoused or homeless or between homes, because it's easier to get to on public transportation. Another example is if you're a store that has a storefront that sells your product in your store, like a clothing store. having an ample-sized parking lot or having your store close to an ample-sized public parking lot, it makes it more convenient for people who live in major cities where it's highly densely populated. So if you're going to open a clothing store in New York City or Los Angeles, there's a lot of people in those cities and a lot of dollars to spend, but also it makes it easier for them to get to your business to be able to spend those dollars. So it serves as a way to kind of draw them in ways that most people may not think about. So that, and in this one, you could also go back to the idea of what I spoke about using, subletting or virtual offices and things like that for your business location as well. But all right, so I'm not going to go deep into this because taxation is its very own and very complicated thing. So, but here's the overview of how different business structures are taxed. These are the different ways or taxation categories. First, you have your traditional double taxation, which is when the corporation makes money. Corporations are taxed this way. When the corporation makes money, the corporation pays taxes on the money it makes. Then when your shareholders or when your employees, get their paychecks or get their dividends, they're taxed on those as well. So you file a separate tax return for the business, but then you file your own personal tax return as well. So you file twice, you pay twice. Then you have what's called a pass-through entity, which you have to file. There's no federal tax income levied, but the profits allocated to your business partners and at the share or the owner level instead. So that's our partnership is taxed that way. So pretty much what you do is you file two tax returns. You file an informational one for the business, which is pretty much just telling the tax bureau about the business, but you only pay because the money that comes into the partnership passes through the business entity and filters down to the owners or the partners of the business. So that's for a traditional partnership. For LLCs and sole proprietorships, they're considered what's called a disregarded entity, which means for the company itself, you don't file a separate tax return and there's no payment at the federal level. All of the profit is allocated to the business owners, or in an LLC, they're called members. And so all you do is you file a form on your personal tax return and along with your personal taxes. So you file once, you pay once. Then we have a business structure called an S corporation, which is pretty much S stands for small corporation. And what it does is it kind of gives you a traditional corporation structure with some of the perks of an LLC. The best thing about that is with an S corporation, normally what happens is the company gets taxed on the money that it makes. And then when the dividends are released to the owners, they pay taxes on that. With an S corporation, the dividends that you pay to yourself as the shareholder or the owner, those are tax-free. So that's one of the bonuses of an S corporation. And what most people don't know is you can form an LLC and choose to be taxed from the IRS as an S corporation. That's a little secret there that you can do. Most people don't know that you can do that. The only downside to that is there are restrictions on who can actually be a shareholder for or an owner for an S corporation. So, all right. Let me stop this for a moment and see if there's any questions. So, do we have any questions? No, looks like no questions. We'll keep right on chugging along. All right. Here are the 6 reasons on why you should form a business structure. 6 compelling reasons. And they're kind of straightforward. LLC stands for Limited Liability Company. What that means is your liability for things that may go wrong in your business are limited to the assets of the business. So let's say that you're making lots of money. Let's say you're now a millionaire, you're balling out of control, but something happens and your business gets sued. and your business gets, a judgment against them for $5 million, but your business assets are only $2 million. That what it does is that means that 2 million that's in your business, that's your business assets, that can be taken to pay the judgment from the court. But any of your personal assets, so your personal bank accounts, your home, your car, your retirement accounts, those things become off limits in most situations. So that's one of the biggest reasons people form a business entity. Some have tax benefits. When it comes to a corporation, you can write off a lot of things as a legitimate business expense. These are the things that people like Donald Trump use to pay virtually no taxes. A lot of times they're legal, but it's knowing the tax code or knowing someone who knows the tax code for them to be able to do your taxes for you, to take advantage of all of those legal tax benefits of owning your particular business structure. Liquidity is another reason. So the life of the business, for most of these business structures, if you pass away, the business doesn't necessarily have to close as long as there are, for an LLC, as long as there's another member, or for a corporation, it continues indefinitely because you've sold shares, and there will always be owners, and you can always hire new people to run the company because the shareholders are the actual owners. You have a reduced chance of audits, simply because if you do a sole proprietorship and you're claiming all these business expenses, they might be looking at you and be like, maybe we need to audit them. But showing that you've gone through the steps to form a business entity, that tells them, okay, they're a little bit more serious. They may be a little bit more serious about their business than someone who just kind of decided to start operating without actually doing any sort of due diligence or means of trying to protect themselves from the business liabilities. It increases your credibility. If I'm an investor that wants to come and invest in your company, if you're a sole proprietorship, if the business goes south, I lose all of my money, and there's no recourse for me, and then because you're a sole proprietorship, you don't have to form any sort of business governance documents to show me how your business is running. And for that reason, you would be less inclined to invest in that business, or myself as an investor would be less inclined to invest in that one. Another reason is because if you have your own domain name, so my company name is LLC for me, my website is llcforme.com. People know, oh, okay, he's got his own domain. It increases your professional appearance to the outside world. There's number one. That's another reason why some of the other things is the goal of a business most times is to make the most amount of profit while minimizing your risk as much as possible. So legal or tax benefits. Here's kind of a breakdown example on the slide of the difference between, let's say you're a sole proprietor and your income from all of your business activities is $75,000 for the year. You see what your tax bill ends up, and you're taxed at that particular tax rate. You get a $5,000 tax bill plus whatever you have to pay in self-employment taxes. Now, let's say you decide to form an LLC and have it be taxed as an S corporation. Same $75,000 income, but you pay yourself a salary of $35,000. So what you're taxed on, you're only taxed on the $35,000 that you make in salary, and you don't have to pay the self-employment tax because you're not self-employed. You're an employee of the company. But that same $3,500 taxed at the 15% tax rate, you've cut your tax bill in half simply by forming a business entity and taking what's called the S corporation election. So that's particular. Another one down there shows you the example of if there's a legal dispute and a judgment's order to be paid between these two fictional people, Bob and Sally. This is what happens. So those are some of the legal and tax benefits of forming a business entity. Here's a list from the Internal Revenue Service, or what we call the IRS. It's our main tax government agency that deals with taxation at the federal level. Here's a lot of different things that are standard, self-employed deductions that you're allowed to deduct for the most part. So as you can see, it's a wide ranging from things such as your continuing education. So certain professions like doctors, attorneys have to take continuing education courses to kind of stay up on the changes in their field. That can be written off. The premiums you pay for your business insurance, it can be written off. Your travel, legal fees, all of these different things. So these are the most common fully deductible business expenses, with the exception of meals and entertainment. So that's another benefit. Liquidity. This is another reason why. When there's a corporation, if there's a corporation, you transfer interest from one person to another. If your parents pass away, you can inherit their shares of the company. You can sell your shares to somebody else without having any sort of restrictions on other than legal restrictions. But if you're in a partnership, most times you got to get the permission of your other partners before. So the life of the business, again, the business is considered in most cases a completely separate entity from its shareholders or its owners. So that's another thing, is the business can live on indefinitely. We have some corporations in the United States that are old, they go back to the 1800s. That's how old they are. And that's how long that they've stayed, because they're a corporation, they're publicly traded, people buy their shares, they can exist indefinitely pretty much. Number 5 is sole proprietors. A lot of people pick this structure because they want to get started right now and quickly, which is a good thing and understandable. But a lot of times they may not be as well versed in, filing their tax returns, what they can and can't write off and things of that nature, because there's little to no distinction between you and the business if you choose the sole proprietorship. So you have a higher chance of being audited by the IRS. So yeah, back in 2006, 1 in 32 you had chances of being audited for sole proprietorship versus 1 in 24 for other business structures. And the last one is to build credibility, to have your name stand out and professionalism out there in the marketplace. All right, let me stop for a moment, see if there's any questions. Any questions? All right, no questions. We'll keep on chugging right along. All right. Step 4, you're going to complete and file your company formation documents. All right. So what that pretty much means is when you decide on your business structure, you have to actually prepare and file documents with the agency in the particular state that governs businesses. All of the formation documents, they serve the same function, but they're called different things based on whatever structure you're choosing. So articles of incorporation for a corporation and articles of organization for an LLC. All right. So here we're getting into the meat of the woods of how to do it. When you've decided, okay, I've picked my business structure, I've done my market research, I've done all of this, I've done my zoning, I've done everything I need to do. You just have to pick. If you're the only business owner, this first step is easy. But if there's multiple ones, you have to pick who's going to be your primary decision maker for your business for regulatory functions. And this is if you have 3 business partners, you're all going to vote on things, but government agencies like to deal with one central person. And so you're going to pick that designated person to kind of be the business entity's representative to the government agencies. So the IRS will want to deal with one person. The Secretary of State is usually what the agency is called in a state. When you form a business, they're going to want to deal with one person. So you select that person, select your business name plus 3 alternates, pick a structure, and prepare and file your business formation documents based on whatever business structure you chose. So if you go back here for an LLC, you're going to prepare your article articles of organization, and you're going to file that with the state government agency that governs businesses. In most states, that agency will be called the Secretary of State. That's in most states. But in some states, it can be called different things. For example, in Missouri, where my business was officially organized before it expanded, the agency is called the Secretary of State. But in the state of Maryland, it's called the Department of Labor, Legislation, and Regulatory Control. In Virginia, it's called the State Corporation Commission. In the District of Columbia, the nation's capital, it's called the Department of Consumer and Regulatory Affairs. So you have some states that are a little different, but the majority of them will be called the Secretary of State. But you prepare your documents and file it with them. And if you're going to do a sole proprietorship, here's the specific breakdown of each business structure. So if you're going to do a sole proprietorship, if you're going to operate under your own name, then you just start operating. I would call mine Marcus Hammond's Widgets. I can just take off and go. But if I'm not going to use my own name, like let's say I want to say, instead of calling my company Marcus Hammond's Widgets, I want to say Widgets to Go. Then I have to select my desired name plus 3 alternates, search, make sure that name is available at the Secretary of State. Then I have to file what's called either a fictitious name certificate, a trade name certificate, or DBA certificate. And DBA stands for doing business as. So that's anytime you're operating under a name that's different than the one that you have. These are also for if you have an LLC, but you're operating under a name that's different than your LLC. Then your LLC must file a fictitious name certificate as well. And literally, yes, it is that easy to start a sole proprietorship. A lot of people will use this method just to get started quickly and then later on transition into a different business structure. Now, this is what in the state of Missouri, this is what your registration of fictitious name certificate looks like. So it's just asking you about the business, the basic information about the business, so they know how to get a hold of the business. For a corporation, you have to choose your decision makers. Now, in your corporation, you're going to have what's called your board of directors. They're the ones who make the decisions about how the business is going to operate. Then you're going to have what's called your executive staff, which are the people who are employees of the company that carry out the day-to-day. Same thing, you're going to choose a name, select 3 alternatives, search to make sure they're available, file your articles of incorporation with the government, which tells you, the general nature of the corporation, who the board of directors are, the names of its directors, and whether you're going to issue the stock you're going to issue. And also in the state of Missouri, here's what the form looks like. And for these business structures, you can use the document that the state provides you, like this one right here, or you can even create your own document as long as it contains all of the information that you see here. So yeah, because sometimes people will want to do their own documents to add other clauses and things of that nature. Same thing for an LLC. What you're going to do is if there's more than one, you're going to pick your one designated representative to the government, and that person's but the owners of an LLC, instead of being shareholders or directors, they're called members. So you choose your what you call your managing member, choose your name, 3 alternatives, search it, file. This time you're filing articles of organization for that. For this one, here's the form that the state of Missouri uses, but you see it spells all this information out. But at the same time, when I started my company, this is what I did. I had an attorney that I worked under walked me through how to prepare this. And literally I prepared, so you see here, the first Article 1 says the name of the company is the H9 LLC. That was the previous name of my company. But if you go back to step 1 on the form that the state gives you, you see the name of the limited liability company is. So I used my own form, and you see the date stamp from the actual government agency right there, showing you that it was accepted and approved. So you can use whichever one you wish. Sometimes, it's just easier to use the state because it's kind of a fill-in box where you literally, they ask you the question, you fill in the information, and there you go. So for a partnership, your business partners, you decide who's going to be the managing partner, who's going to be the main primary, representative. And then there also are different types of partnerships. And what you have is you have your general partnership. You have where all of the partners are jointly liable for everything. Then you have limited partnerships, which is where you have the general partners who run the day-to-day and they're responsible. They have all of the liability risk. Then you have your limited partner who doesn't get to help with the day-to-day decision-making, but they provide funding and they're only liable up to the amount of their funding that they provide. So for this one, you're going to draft and file your application for registration or your articles for partnership and get your fictitious business name certificate. And this is what that looks like for the state of Missouri. So as you can see, all of the forms, even though they're called different things, they serve the same function and will be very similar in nature. Now, for a nonprofit organization, for what a lot of people don't realize is nonprofit organizations, they are a traditional corporation that has applied to be exempt from sales tax or from taxes. So you form a nonprofit organization the same way initially that you form a traditional corporation. You select your board of directors. You choose your name. You file your articles of incorporation. Then you take the next step, which is you filing the application to be represented for tax exemption. And it's under the subsection of 501c of the Internal Revenue Code. So you pretty much form your corporation, then you file an application to be exempted from taxes. So most people don't know that or don't realize that a nonprofit organization is a corporation that's just been granted nonprofit status. So, and here's the articles of incorporation for a nonprofit. All right. And so many of this can be done again by yourself if you know the correct documents, but it may also be a good idea to consult a legal professional if you have questions about the differences in the structures and to determine which structure is going to be best for you. I have a whole other presentation on all of the different business entity structures, the pros and the cons, and how to form them step by step. So that's a whole other seminar, but getting getting a quick opinion from a legal professional can go a long way in confirming that you're on the right path. So, all right, let's stop and see if there's any questions.
Marcus, if I can interrupt here, we are almost on the hour here of the session.
Okay.
So we need to be wary of the time.
Okay, I can speed it up.
What are the most important steps that are still to be discussed here?
Step 5 is going to be the most important one. 5 and 6, those are going to be the most important ones. The other ones I can kind of speed through a little bit because it's not as detailed. So yeah, the next two things.
We will definitely do some more sessions where we go into detail on some of these points.
Gotcha.
But let's try to limit it now to the most important ones, and then we go to another session later on where we go deeper into some of those once people have more questions about it.
Perfect. Sounds great.
All right.
All right. Step 5, after you formed your business entity, you got to do your governance documents. Your governance documents pretty much are the things that tell people how it's going to be run. Again, based on your business entity, they're called different things, but they function in the same manner. Again, for this whole process, most of the steps you can do yourself. This is the one step that I strongly, highly advise you engage the services of a legal professional for these particular documents. Everything else you can, with your own legwork, you can do it yourself. With this, because it impacts your business and it spells out the responsibilities and the way that things operate. So this is the one thing. If you get assistance with anything, if you don't get assistance with anything else, you should get assistance with preparing your business governance documents. Yeah. A lot of the online templates that you get, they're not state specific and they don't capture the way your actual business runs. That's why it's important to get assistance. So when you go into the things that are now what come in these governance documents, it pretty much spells out this is what your governance documents needs to have. So that way you know how the business is run, who are the movers and the shakers and the decision makers. So those are all of those items. The next step is these are the things that go into your different governance documents for an LLC or for an operating agreement. It's for your LLC. You see here it's for your bylaws for a corporation. They're very similar, very similar. Government documents these are also policies that you'll likely need to have within your organization that help contribute for your employees and your partners to know how things are supposed to go. So these are common policies it's very wise to have these policies in your organization. So step 5 is, again, drafting your business governance documents after you form the business entity with the state. All right, going for step 6, selecting your accounting method and getting your tax ID. So there's 2 types of accounting methods. Very simple, very straightforward. Cash method, when you get the cash in hand, that's when you record the expense in your accounting. Accrual methods, it means when you incur an expense. So if I go place an order for widgets, I may place an order today, but I may not pay for 30 days. I record it when it's actually incurred, not when it's paid. So those are the differences. When you select your tax ID number from the IRS and the state, you'll need to know which one that you're going to do because they will ask you in the application. So select your accounting method. Then to get your federal tax ID number, here are the steps to do it on the IRS's website. You can get these in PDF format and you can get your letter instantly, or if you do it in the mail, it's 6 to 10 weeks to get it. Now, for non-US citizens, that do not have a social security number, it can be a little difficult to get your tax ID number. So what you can do, I've partnered with an attorney who specializes in obtaining tax ID numbers for non-US citizens who have a business entity in the United States. So I can share that information as well. So you can go directly to this guy and he can help get that information for you. Also, if you're going to be an S corporation, you want to elect that status as well. For nonprofits, you want to make sure to file your form with the IRS to get exempt from paying taxes. If you sell a product, you'll need to get a state tax ID number from whatever state that you're doing business in. And so different state entities, the agency that governs your tax ID number is different in different states. So these are 3 that I've worked with regularly: Maryland, Virginia, DC, and California. Then you're going to open a business bank account. Here's some considerations for when you open up your account, things you need to think about when you're selecting a bank. For most banks, they're going to require you to have your business governance documents. So for an LLC, you're going to have your articles of organization in most states in the United States to open up a business bank account. So pretty much to do it, you got to have your business formation documents, your business governance documents, your tax ID number. They're going to want to know your ID. You're going to want to see a picture of your ID and your social security number, or if you don't have one, they have what's called an individual tax identification number. And that's for non-US citizens who have to pay taxes in the United States. So you'll need that as well. And your opening deposit, most of them usually are an average of $100. I have a list of preferred businesses because they come with a free business banking account, whereas that's hard to come by a lot of times. So these are some of the ones. BBA Compass, they've now merged with PNC, Comerica, Navy Federal Credit Union. If you're a family in the armed forces or a family member was in the armed forces in the United States, or US Bank is a large bank that can do that as well. Here are a list of other banks that aren't free, but they give you ways to try to avoid the monthly maintenance fee. Wells Fargo and Bank of America are two very large banks. Bank of America, I know, is international as well. So the last step, or next last step, is get your relevant licenses. Based on what you're doing, you may need a basic business license or a license that is specific to your industry. This can be a little tough to find because they're called different things in a lot of different states. So as you see on this example here, just between California and Maryland and Virginia, they're called different things. You got to go different places, and you could have to go to multiple places to find your actual licenses. Your last step is to purchase business liability insurance. And pretty much what it does is it covers you in case there's something that goes wrong. These are the different types you can find of liability insurance. They cover different things. You can get combination policies. And this pretty much secures you in case you make a mistake, your business does something wrong. Your insurance can then pay for whatever. Let's say someone gets a court judgment against your company. The insurance can pay that judgment for you versus them taking the assets of your business. This way, your business still continue to use its money to operate and use its liability insurance to pay for any judgments. And again, here's a list of the different types, and you can select yours based on whatever your business type and your business model is. So, final tips, the main goal of a business is to make as much profit as possible while protecting your business and personal assets from risk, debt, or loss. Now, following the steps to keep in good compliance is what you want to do, because there's what you can call piercing the corporate veil. Courts will use this when there is a business dispute or when someone may sue your company to make the decision on whether you are operating as an agent of the business and in the best interest of the business and legally as well. But if you have determined to not be following the regulatory requirements and things you're supposed to always do, then they can pierce that corporate veil. And then at that point, they can come after your personal assets. So this is one of the biggest things on why forming a business entity and staying in compliance is a good thing to do. And that is the end of the presentation. So we've got all the way through it. That's the end of the presentation.
Awesome. Yeah, I think this is a really interesting topic because from my perspective, like if we're talking about building businesses, there's a lot of talk about marketing, about sales, about operations and stuff like that. But really, I would almost say the legal requirements, the setup, making sure, also taxes, but that is also accountancy, of course, is really an important part as well, because we don't want anybody to get in trouble at a certain point. It's all good and well to sell things online, but we still need to have some structure behind it. And I know that you can sell a lot of things as a natural person, right? As you don't really need a business, but we are all for building a big business, a real business. So this is really important. So thank you, Marcus, for this. Now, again, this will not be the only thing around this topic that we are going to present to you guys. We are going to work together with Marcus more in the coming days, weeks, and months to deliver even more information about all of this, more into detail. So you guys have all the information that you need and all the help that you need to make sure that everything is set up correctly. Right, Marcus?
Definitely. I'm here for questions. I can put my information in the chat box if you want to reach out to me with questions and things of that nature, if that will help as well.
Well, we will be seeing you as a Titan master for sure within Titanology. So all the information around Marcus will be available through Titanology. Do make sure that you reach out to him if you have more questions, or reach out to me and I will get you into contact with Marcus for sure as well. Any last words, Marcus? Like, what do you see in the current world, in the current times, that is something that is really crucial to do as a first, if you're building your first business, let's say?
I would say one thing, get very familiar and build relationships with a professional that's in your particular field in the country that you're wanting to operate in. If you can even get to know or build a connection or a contact within a particular government agency in that country as well, because those are going to be the movers and the shakers. They're going to be the ones that are going to know, what new updates are coming, what adjustments to the way things are supposed to be done, are going to be. They're going to be the ones that are going to know those types of things to be able to kind of guide you as things may change.
Awesome. Good stuff. Thank you a lot, Marcus, for today. We will see each other very soon again, I'm pretty sure. Thank you, guys. Everybody, thank you, Titans, who have been watching this live or the recording. Again, if you have more questions about this, put them in the comments in Titanology, where the recording will be, and I will see you all on the next live session. Thank you very much. Have a great day.
Have a great evening, everyone. Thank you for having me.